Welcome back to the channel, y'all. We are here back again for weekly rundown number 12. Number 12. So today we're going to be talking about Bitcoin, and it is forming a golden cross. And we're also going to talk about job losses. So tune in. Let's see what we got in store for the day. Bitcoin eyes golden cross at a Fed key economic data. What lies ahead? This is from investing.com. I will leave the link to this article in the description. So we're going to talk about what exactly this golden cross is and its significance to the Bitcoin price. So Bitcoin has been in a consolidation phase around 34,000 level following last week's rebound, maintaining its recent gains within a pivotal price range. In our previous analysis, we noted that after breaking through the psychological resistance range, spanning from $30,000 to $31,000 on substantial trading volume, Bitcoin advanced into the Fibonacci expansion zone between 3,000 and 35,000. That was the pump that we got from that fake news. I don't know, man. I guess Cointelegraph kind of did us a favor with this news and whatnot. Maybe just coordinated. You can finally get some price volatility, man. So, but bro, tell me, look at this. We going up there. While buyers and sellers enter market monitoring mode in this zone, the Bitcoin price continues to remain at the 34,000 limit. The next move may come after this week's Fed decision. This Fed decision crept upon us, man. The short-term outlook shows an intermediate resistance at 34,500 on average. They got 34,500, but I say once we break 35, they can stay up there, man. Like, that's when those big numbers are on the horizon. And then, so I'm telling you, bro, these ETFs also, it's going to be more than one. And with the spot ETFs, they actually have to buy the Bitcoin. You know what I mean? I think with the futures ETFs, I don't think you have to actually go in there and buy it. Like Kathy Wood's doing one, Bennett, Grayscale's doing one. All of these companies got to go through and they actually have to buy the Bitcoin for the spot ETF, which is what I'm telling you, bro. That's going to send the price soaring. I'm gonna go down here where they're talking about the golden cross, so we can get
when they're talking about the golden cross. When they're talking about the golden cross, they really referring to
it's like the 50-day MA crosses over.
For crypto, it's the 50-day. For stocks, it's the 200. If the more perpendicular it is, the more of a cross it is. But in crypto, when it crossed that 50-day going down, that's a death cross. When it crossed that 50-day going up, that's a golden cross.
And death cross is normally followed with like downward price movement, right?
If you're a swing trader, you know what I'm saying, after the death cross, you wait for it to go to the bottom, and then you wait. Where it's a way for you to look at it when you look at the charts. I can't remember the MACD. You can look at the MACD, and when the MACD go from being red, it'd be like little red bars, and when the MACD go from being green, you can put it in the purchase while it's still under the death cross and wait for the golden cross. Once they hit the golden cross, that's when you really start putting money into it. That's once it go over the 50-day, and you basically buying the pump while it's going up over the 50-day.
Exactly. And then once that death cross come about, that's when you know, all right, it's time about to sell.
The death cross hit, you sell. You sell before you hit the death cross, and you buy right after after the golden cross.
Remember we was talking about time in the market is not better than timing the market. If you just check out, if you was to just take,
but look at what I just said.
Look out for the death cross. Look out for the golden cross. You know what I'm saying? It's like at that point you can just wait. You know what I mean? Or you don't have to wait until it happens. But like, say if you were somebody that was still holding cash, like you would get in there right now, you'd be perfect. You'd be Gucci. You know what I'm saying? You'd be Gucci.
Like I said, there's the different golden cross more of a thing. To be honest, for swing traders, short-term traders, ain't nothing wrong with that because I do indulge in the short-term traders too. But that's more so, traders.
Gotcha. So yeah, man. So let's see. We got right here. Golden cross starts to form as Bitcoin price eyes a $50,000 breakout. let's see. On a daily chart, golden and death crosses sometimes take a long time to happen. Tom said, and after they happen, either very good or very bad things happen. Back in March or February 2022 is when we formed that death cross, and we did not get out of it for an entire year. And when we broke through, that's when it indicated we were out from the bottom. And in price action that mimics previous cycles, Bitcoin's current golden cross proved to be hugely significant. Now we have to come full circle with this golden cross, and this one may last all the way until 2025. And what I say, man, and I said I'm probably gonna sell like around first quarter 2025. You know, we'll see where things are. You know what I mean? So, you know, I don't know if I would do 50% then. I mean, depending on where we are, 50%, 80% or so, you know, to the end of 2025. I don't know, bro. Yeah, I'm still thinking maybe first quarter, but I mean, it could go through 2026, bro.
They didn't say to the end of 2025 on that right there.
Well, until 2025.
Until means the beginning.
It says this one could go all the way. We may not have any more stops until the end of 2025.
If I tell you it's gonna be cold next week, you need to anticipate for it to be cold on Monday.
On Monday.
You know what I'm saying? Yeah. You know what I'm saying? Yeah. If they say until 2025, that means you might not make it to the end.
Yeah. You may not. So I still got my eye on maybe first quarter 2025. Just see where we at, man. So man, that'd be crazy, bro, because that'd be right after the election too.
Mm-hmm.
That'd be right after the election too, man. So it'd be interesting to see how that's gonna take place too, man. Hopefully we can get a more crypto progressive president up in office. I've been hearing a whole lot of chatter, and I think Solana has their like conference or so this week, if I'm not mistaken. Solana Con, I don't know, man. They Solana's having something, but there's a lot of folks that are real bullish on Solana right now. There's more money going into Solana, and then there's more money flowing out of Ethereum. I think people are starting to understand Ethereum does what it does, but at the same time, you know, during the bull market, man, especially when there's high volume, Ethereum is gonna be tough to use, man. I don't know, bro. I was thinking about swapping some Ethereum for Solana. I was thinking that kind of didn't have that big of a Solana position. I do need to expect that come this next bull market, man. If when things start to happen, when there's a lot more volume in the market, bro, them Ethereum gas fees are gonna start getting real high. It's almost gonna make the chain unusable. I don't know, man. We'll see. I may split my Ethereum position down into Solana, especially so if you're holding like ERC20 coins, like ERC20 altcoins, you still have to have some Ethereum for gas fees, for swapping, taking profits, or whatever it is you plan on doing. If you're, if you want to move those coins from a hardware wallet to a centralized exchange. So that's something to take into consideration. But yeah, man, but Solana's trying to onboard the next $100 million users, bro. 100 million users. VanEck's prediction assumes that Solana becomes the first blockchain to host an application capable of onboarding over 100 million users. Ooh, boy. Okay, Solana. But as per the report, the digital assets could surge to $3,211.28 in a bull market. But it may plummet to less than $10 in a bearish scenario, influenced by diverse market factors and revenue forecasts in critical sectors. So if all goes wrong with Solana, it can go back down to $10. Solana's one of the ones, man.
How much is it now?
How much is Solana right now? Let's see. How much is Solana right now, bro? Solana right now is, look at this, bro. Oh, God damn. Thing's still going up. Solana's $35.80. So let's look at the past year. Yeah, so the past year has gotten as low as $9? So Jesus. So yeah, this is when $9 right here. So I'm assuming this has to be when Solana took a deep dip when the SEC came out and sued Coinbase. And that's when, remember when they sued Coinbase and then Robinhood went ahead and took off, because you could have bought, it was a time where you can buy Solana on Robinhood, you could buy a whole lot of other Polygon on Robinhood, but they just delisted them once the SEC caught that lawsuit against Coinbase. Yeah, man, Solana been dipped, man. It been dip. and it's pulled right back up. So let's see the past month. Yeah, this Solana the past month right here, bro. Look at this chart right here, bro. Only $35. When I paid $35 for a Solana token right now, I had to see that. Honestly, bro, I probably had to see that thing come back down under $30 for me to start buying it. I want to see Solana get a little $30. So, but I mean, I don't know, but from the way it looks, this thing may not even come down. You see what I'm saying? It's another coin I was looking at. Hey, bro, so we was late. Remember Sats? I'm saying the coin on Sats. It's one of the Ordinals coins. When I've been to trade with this coin for like a week, bro. So let's see. Oh, I got in this thing about right here. So and the thing is, bro, I do not see this coin coming all the way back out here, bro. And this is almost like, so there are 21 trillion of these coins. You have 100 million sats in one Bitcoin. The same way this coin was minted was the same way Bitcoin was minted also. So this is like it's, I don't know, man, if it's considered a meme coin on Bitcoin, but it's also the gas utility coin for the Unisat protocol. I don't know, bro. I just had this weird feeling about this coin, man. I really think that you're gonna have all this money coming to Bitcoin, bro. You can't tell me ain't none of that gonna touch these Ordinals protocols, man. It's no way. It's no way. You're gonna have some Bitcoin max to try to pump this thing up to the moon, bro. Other than that, man, shit, that's it, bro. It ain't nothing really too much going on right now, man. We got Fed meeting this week, so I can imagine prices is taking a little bit dip right now. But I mean, other than that, man, that's about it in the crypto market, bro. You know what I mean? Everybody just waiting on the SEC and Gary Gensler to get their act together so we can go ahead and send these prices to the moon, bro. Yes, sir. But yeah, bro. Bro, I've been in this trade for about a week now with this SAT shit, bro. Cause I was looking at it and I was like, it's crazy how, I don't know, bro. It's just crazy, like how I perceive that coin. Cause it's almost, I look at it as almost buying Bitcoin in its infancy. You know what I'm saying? But the thing is, it's a meme coin, but it's not a meme coin though. You know what I'm saying? Like the meme of it is 21 trillion coins. So if it's 21 trillion coins or 100 million Satoshis in one Bitcoin, for this coin to be a representation of that, it's kind of cool to me. You know what I'm saying? It almost feels like you're buying Bitcoin in its infancy. You know what I'm saying? I'm fucking with that shit. And plus, it's the gas token on the Unisat exchange for the for the whole BRC20 ecosystem in general. So from that as well, there's going to be a lot of volume, with this coin. So
all right, I want to start off with, we was talking. You mentioned the FOMC meeting earlier. I wanted to start off with the CME group, with their watch tool, with their prediction as to what the Feds are going to do with the interest rates, whether they're going to keep them the same, raise them, or reduce them. Mm-hmm. So, all right, so I want to start off with this. Let me see if we can make it so the viewers can see this a little bit. All right, well, I'm still going to start off with this. This is the CME watch tool. They're basically saying it's a 95% chance that the Feds are going to keep the interest rates at basically 525 to 550 basis points, meaning that they don't think they're going to raise the rates at all. I noticed that this time they have a 5% chance that they will actually reduce the rates, and they don't have any percent chance listed they would actually raise the rates. I found it to be quite interesting. So I guess as far as predictions go, they're taking raising rates completely off the table. And
about time.
What are your thoughts on that, bro?
Hey, man, it's about time, man. It's about time. It's about time. So, I mean, but he said he's going to do that anyway. So, I mean, I'm pretty sure it's going to be like that. It's going to be like that, for the next year? So I think we may get one next year, maybe one next year. So, but I guess they waiting for something to break. Some has to break. If they don't do it no more, man, that means something got to break. You know what I mean? So we'll see. We'll see what it is. You think maybe they was expecting this war to do it, which I don't think it did.
My thing is they taking raising rates off the table, but with these wars and stuff going on, especially if we end up spending more money on wars and stuff, that's going, in my opinion, increase inflation. So if they stop raising rates and they end up while inflation's still going up, that's going to be a huge problem. And I guess they're hoping that what they've attempted to is enough to
Fortunately,
mitigate the current inflation, and I think it is going. I think the effects are slowly going to trickle in when you look at the housing market and all that good stuff. But with energy prices, stuff still high. The food prices, I guess they coming down compared to last year, but with energy prices still high, inflation is kind of still high at this point. But maybe that's a sign that deflation is to come, and they're just not speaking on it, and they're kind of just putting it in the data versus saying it directly. So I don't know. I found it to be kind of weird that for the last two rates, for the last two meetings, everybody's been talking about maybe there's going to be another skip and another one more interest hike before the end of the year. But now that's completely off the table, and now there's a small percent chance of actual reduction starting to creep into the picture.
well, don't forget, man, the definition of a recession was changed last year.
True, but I mean,
they changed the definition of what a recession was.
I look
Even
forward to
though we
seeing
in a
it
recession.
be like, but at this point, it kind of is what it is. I'm really kind of waiting for the results and the effects to start to trickle in. Outside of the CME Watch 2 and the Fed, and the Fed meeting, I wanted to talk about jobs. I know since since it's been like this before we started this channel, but I got it documented with this channel. I've been talking about how I think a recession is going to come, and I've been talking about how I think the Fed isn't going to begin to reduce interest rates until jobs are lost. I've been saying this consistently. You probably go back to the first rundown, the first video we did about an upcoming recession on this channel. You'll see me talking about how I think job losses are what's going to actually end up causing the Fed to reduce the rates. And I think the beginning of that is starting to come, the season where we're starting to see jobs. Of course, everybody's still talking about basically almost record low unemployment numbers. But like I said, it is indeed coming. And I want to show you and all the viewers proof to what I was talking about. And then it's actually starting to trickle in. All right, let's see here. So first of all, what is this? Fears of employment.
Go ahead, share it on the screen.
Oh, you can't see it. My fault. Get back over here. Oh, there we go. All right. So fears of employee displacement as Amazon brings robots into warehouses. So Amazon is starting to bring a bunch of robots into warehouses to do jobs that people are normally doing, jobs that are repetitive that they can actually train a robot to do. This completely makes sense, but of course, a lot of people indeed do those jobs. With those people losing those jobs, there's going to be a problem. Less money for those people. So Amazon, everybody knows over the past few years has been a big employer. Everybody probably knows someone that has a cousin or something that works at Amazon. Now you're starting to see this starting to trickle down to common jobs. Amazon is probably going to be cutting jobs, and not all these jobs are going to be replaced, potentially. All right, I don't know if you know about this. Going to the next article.
But imagine going to work and that's your coworker.
Bro, at this point, they're not going to deal with the machine. The machine going to do other tedious parts that's repetitive. It's the guy that need to make corrections and stuff like that. We actually thinking more that they're going to keep. That's just being honest. But a lot of people do have those repetitive jobs, not because they want to, because it's a job that they end up with. But a lot of those jobs are being, replaced, especially with AI coming in. The next link. Can you see this, bro?
Yeah, I see it.
All right, so the United Automotive Workers, they have basically been on strike, and while they have been on strike, well, I guess they've come to an agreement with GM, which is I think the largest employee of auto workers. But they've been on strike, and the strike was ended, and they've come to an agreement with GM, which is General Motors. From my understanding, General Motors has agreed to pay 11% increase in wages, 14% after a 4.5 year contract. So, from my understanding, if you're there, you're going to get 11% raise. If you're within this union or whatever, you're going to get a 14% raise after you do a 4.5 year contract. And apparently, senior workers are going to get an increase of pay of 30%. Well, I'll take that back. Some workers are going to get an increase of pay up to 30%. Senior workers could get an increase in pay of up to 150%. So my point is showing this article. First of all, you're seeing a lot of people go on strike because then they're requesting money, right? And GM is saying, hey, we're going to pay you guys. Just come in back to work. We're going to pay you guys more money. GM, nobody's thinking about this, is going to do the same thing Amazon just did. They're going to bring those workers back in, pay them more money, find robots to do the jobs that's repetitive, find AI that can do the jobs that are repetitive.
And eventually lay them off.
Lay off the rest of the workers and just pay the people who are essential more money. That way you're going to end up seeing more jobs as a result of this pay increase. Not only that,
these strikes is really hurting folks.
Hold on, bro. Hold on. Not only that, if you look at the stock market right now, you would see that a lot of companies are actually starting to lose money or anticipate losing money, lower sales due to the possibility of an upcoming recession, the possibility of upcoming job losses, etc. To be honest, I just lost my train of thought. It kind of threw me off for a second. But with these companies anticipating these losses, it would make sense, even outside of this, for them to start cutting back on workers in order for them to save money. Now that they got to, for a fact, spend more money on certain workers, it would make sense to, for a fact, get rid of the ones who aren't needed. Find the people the ones who want to stay. Okay, I'm paying you more, but you're going to do more. You're getting 11% more, but you're going to do 20% more. You're getting 100% more, but it's 30% of the people here. We're going to reduce. You know what I'm saying? By 1/3. We're gonna double the pay and reduce by 1/3. Like, that's what's really about to happen, bro.
So it's going to be mandatory for all these companies to integrate AI into their operations.
Oh, this is a free world, capitalism in the United States. It's not going to be mandatory, but the thing is,
they're not going to recover. They're not going to recover from having to pay
exactly
this extra 11%. You know,
in order to make money, in order to survive as a business, in order to adapt to what's going on as a business, they're going to have to integrate
AI. They have to do it.
It will be smart as a business person to integrate AI. It will be smart to integrate these robots, because if Amazon doesn't integrate these robots and their workers go on strike, not only do that mess up the process and make them lose money in that moment, it costs them more to keep those workers.
Keep them workers. Yep.
All right, bro. All these ads crazy. So Rite Aid are closed 31 stores in California, and I know you might think, okay, this ain't a lot of stores. Number one, it's solely in California, and maybe Rite Aid just getting phased out and they getting taken over by, Walgreens and CVS, right? CVS, Walgreens, and Rite Aids all together are closing thousands of stores. That's
for online stores. They make more online stores.
Bro, apparently drug stores, number one, have higher prices. Everybody knows this. Apparently, due to the cost of them having the store open itself, they charge even more for products. So people are finding cheaper alternatives online. I think like Mark Cuban came up with like a cool company that charged like way less prices. Him and a lot of other people that came up with companies that charge way less prices for medical supplies online. And so as a result, a lot of these companies starting to go out of business. Rite Aid apparently has filed for bankruptcy. They have closed 400 to 500 of their stores out of about 2,000. I don't want to spend too much time on this, but yeah, man, it looks like a lot of stuff is being closed. Let's see here. What is this? On another note, Geico, from my understanding, is closing 2,000. It's closing. It's cutting 2,000 jobs. And I got this from a local news site. This is from Macon, Georgia. As you know, you in Atlanta. I'm here 30 minutes from Millersville, 30 minutes from Macon and Millersville. So this is local news to us. This is 2,000 jobs roughly being lost in our area from Geico alone. So they show you that it's starting to get closer and closer to home. This is starting to become a common thing. Like I said, it's going to get to the point, like in my eyes, in my opinion, it's going to get to the point like in 2008 in that area where we all knew a lot of people who were losing their jobs. Not only is this Geico, not only is this a local thing to us, Liberty Mutual, another insurance company, to cut 850 jobs.
This is around the world or local?
This is going on in general, bro. The one I showed you about Geico was local. That was Macon. That was Macon, Georgia. Remember, I've been talking in the last month when we did our stock picks, and I've been talking to you about this basically all month. Dollar General stock is up for the past month since I talked about it, but for the year it's down over 52%. And this is Dollar General, one of the most stable stocks that you can get, in my opinion, and in a lot of analysts' opinion. So maybe this is the time to make money, but right now, it's live, bro.
Dang.
So if Dollar General is something that's stable, if Clorox, which we're looking at right here, something this stable is down this much, you don't think Clorox, Dollar General is going to start laying off people?
Probably.
Middle class people, me and you. How many people do you know that work at Dollar General? Or have?
I don't think I know any currently now, but I know a few people that have worked at Dollar General.
Especially when you was at college and stuff like that.
Absolutely.
Fresh out of college, all that stuff in college. Imagine how many those people work at Dollar General losing their job. Bro. I know a lot of people. Personally that work for Geico.
I do too. Personally,
I thought about working for Geico.
I do too.
I thought about doing it because it's right there in Macon, bro. My wife got a cousin that work at Geico. I know there's a couple of people that we went to school with, that we went to college with, used to be around that work for Geico, bro.
Yep.
People that if you local to this area, you know somebody that work at Geico. So
yeah, I know some people personally right now. I still talk to that work here.
Like I said, I ain't trying to stretch this video out. Like I keep my section kind of short, bro. But I just want to prove my point in what I've been stating since we started this video, that it's gonna start and basically end with job losses. This is only the beginning. This is a few thousand job losses. But once we have a few thousand in every other city, every major city, that's when it's gonna become a problem. And that's when they're gonna have to take down these interest rates.
And this is slow. This is a slow in occurrence. That's going to happen as time just gradually goes on. Like we're not going to see this happen like overnight.
It's slow at first, and then you will see it happening overnight.
Okay.
Like it's starting to pick up. It's logarithmic. It's parabola. I think that's what a parabola is. Parabola one might be the one that go like that. But it slowly goes and then it upticks, bro.
Yeah.
Because once everybody realizes that everybody's firing and not hiring, and there's less money to be made, it's gonna be a cycle of more of it.
Yeah, man. And these interest rates finna stay up for like damn near a whole year, bro. So it's gonna be curious to see these interest rates. Like I don't see these I don't see the rates coming down
with these rates
anytime soon. Especially not within the. I don't see pausing yet, but like bringing them down. Like I don't see that. Definitely don't see that happening next year. I mean, did they say they was going to keep them? They said
they're gonna keep them up until they get to the rate of, they're not gonna go down until they feel like inflation is kind of tackled. But
so they trying to squeeze everybody.
Yeah, check this out. Other than the consumer, other than the person who's buying stuff, other than the people who are buying, the interest rate is high and the price is still high. What happens to the person who is a car salesman that can't sell a car because there are no buyers who can afford their car because they don't have jobs and the interest rate is too high? What happens to the car sales? What happens to the real estate salesperson, the real estate agent, when there is no home that's affordable?
They lose their jobs.
If you have a home that's $200,000, it's over the past few years, you can have a mortgage of $1,000. Now that same home, which originally had a mortgage of $1,000, if the interest rate is going up 5%, $200,000 home interest rate going up 5%, that's an extra $10,000 a year that's tacked on. That's almost an extra $1,000 a month. That person that would have had a $1,000 mortgage now has a $2,000 mortgage. How many people can take a $2,000 mortgage for the same home that used to have a $1,000 mortgage, bro? You see what I'm saying?
Yeah, man.
Not only will the consumer be hit, all the middlemen are due to be hit too. And when the middlemen are due to be hit, that's when we see recession. But that end my section, bro. I guess that we can really that can really take us out. You had anything that you want to throw on?
Shit, not really. Well, no, we finally sat our quarterback down, man. So we put our backup in the game. But like our coach Arthur Smith said, like, okay, he was out for a concussion. I'm like, nah, bro, you just saying that shit. They need to put another quarterback aside the game for the Falcons, bro. And we lost our best defensive player on the defensive line to an ACL injury, bro. Our best defensive line player, Grady Jarrett. Grady Jarrett is the only player on the Falcons defense right now that was currently on the Super Bowl team that we went to. He's still on it.
And I think I speak on behalf of myself and the subscribers, potential subscribers, and the viewers of this channel. I think we all agree that at this point, we all deserve to not hear nothing else about the Falcons on this channel, bro.
Nah, bro, because the season ain't even. No, bro, the season.
Week one.
The season ain't even over with. The season. Look, the season's not even over with. And technically, we still first in the division, bro. So we can be 6-12. We can be 6-12 and still host a playoff game. Because it's all about our division, bro. And our division sucks, bro. We can have a losing record and still host the playoff game.
If they trash, bro.
You know what I'm saying? But yeah, man. But bro, at least we finally saw what our backup quarterback could do.
Bro, I realize now that Tom Brady gone, I realize that now. I realize. Look. I realize the reason that I like Tom Brady is because not only he wasn't a great athlete, bro.
Hell no.
Look. Tom Brady had a winning mentality. He had a plan and a goal like that. He had a certain mentality, bro. And I realized that it ain't a drop in the Falcons, bro. It ain't a drop of winning mentality there, bro. It ain't a drop. It ain't
because our quarterback is subpar, man.
Bro, they don't deserve to be on this video. I'm for real. They don't deserve to be spoken of on this channel. Juice, garbage juice, bro.
Garbage juice.
Man.
Oh, but look. Hey,
bro, I don't want no free Falcon jersey right now. Real, I don't want no big jersey right now. I don't even want the throwback Vic, bro. They just ridiculous.
But they honestly, bro. They look lost, man. Like,
so you told me to watch one of them games, and they've been going downhill ever since. Man,
we won last week, though.
Man, to who? Man, I'm out.
We won to the.
Make sure y'all like, subscribe, guard. You know what I'm saying? If all that talk is hindering y'all from subscribing. We lost.
For the Falcons.
We lost a subscriber.
I know, bro. I know. I kind of know.
Look,
I think I kind
you
of
lost them. You lost them.
I know I did. Because it was a chick that I was.
You lost them. No. It was somebody said this man. It was like I can't take this man's pick seriously.
They said that for real.
No, I'm joking, bro.
Bro, no.
It was like, you can't take this man picks. None of these picks. They stopped for the month. Bro, when they heard you say the Falcons, they took all their money out of crypto. They took everything out of stock. They took everything out of metals.
Bro,
they unsubscribed, bro. When you mentioned.
Bro, we lost a subscriber.
You put the X up. You put the X up. They subscribe. It was a old Patriots fan. He was like, "What is this?" He was like, "What it is?" Hey, but that was me. I was a subscriber. I said, "What is this?" I said, "What is this?" Unsubscribe. Hey, but we're gonna catch y'all on the next one. I gotta go here. I gotta get ready to make dinner, bro. So
all right, man.
And I'm gonna do a video soon on this. I ain't even gonna show y'all what it is. I'm gonna do a video soon on that. I got a plan coming. I've been googling some things. I got a plan. Hopefully we can integrate some more people into this channel. Hopefully we can show y'all some more stuff on the new channel coming soon. Make sure y'all check out this video. If anybody who stayed to the end of this video, we got some real good stuff coming up. So make sure y'all stay tuned.
Peace.
We out.